Hey guys, Bill Soriano here from Pittsburgh. It's Saturday, April 19th, 2025. This is going to be the recap, the weekly recap for this week, the week that began Sunday on April 13th, right? And this is again for our damn near 100% objective 4-hour supply and demand zone trading, right? So we have this PDF. This is a free PDF, right? This trading strategy is completely free to you, right? Damn near 100% objective, right? There's two training videos you have to watch here. This one's right here, right? And then this one right here for the entry model, right? This is the damn near 100% objective 4-hour supply and demand zone trading, right? We're going to the 4-hour time frame, right? We're using some EMAs to identify the trend bias, right? We're using these EMAs to make it 100% objective, right? Then we're using another indicator, the Lux Algo Smart Money Concepts indicator, which I show you in the training, to tell us where is the best order block or where is the best supply and demand zone to trade from, going with that trend bias that we just identified with the EMAs. Once that area is hit, we then drop down to the 1-hour time frame, right? And we look for our entry on the 1-hour time frame. Now, this has changed slightly, which I'll show you in this video, and I do have to make a new video here, but it's still pretty much the same. There's just something that we look for on the 30-minute time frame first. Okay, so all that's in that video there, right? Again, this is a free strategy. However, we do use TradingView to mark up our charts, okay? And with TradingView, they do give you like for the free account, you're able to add one indicator, and I think you get like maybe you get a couple alerts that you can set, and that's just not enough to do this plan if you're going to watch all the Forex pairs like I do, okay? So you don't have to, but they do have a essential plan for $14.95 a month that lets you add more indicators to your chart and also gives you, I think, like 20 or 25 alerts, which should probably be enough for you to do this. Now, again, you don't have to do that if you don't want to. You can just look at a few pairs instead of all 28. But if you want to be able to set alerts and add the indicators that you need to your chart, then you may want to look at upgrading to the essential plan on your TradingView account, right? So if you already have a TradingView account, just go to upgrade section. If you don't have one, you can click this link to save money to set one up here. Again, this is a higher time frame strategy, and you do need to spend about 30 to 60 minutes a day, updating your charts, drawing and adjusting supply and demand zones, drawing fib zones, setting limit orders, managing trades, all that stuff. And you won't get as many trades on this higher time frame because it's a higher time frame strategy, right? You'll see that last week we had 3 trading opportunities. One of them was actually still following up from the week before, right? So we had actually taken the trade the week before, and then we held it over the weekend and end up exiting this week. Okay, so if you want a more done-for-you system, our company that we are with, that our community is with, right, has educators to go live every day. They have these educators and other master traders that will actually send you trade ideas to an app that you can download on your phone. Okay, so if you want something that's more done for you and you want the opportunity to maybe take more trades every day, then you might want to watch this video by clicking here. Okay, then if you decide that you do want to join the company that our community of traders is with, there's another video here that you can watch to see what you get and everything like that, how much it will cost you, because it is a membership based program. And then if you just want more information in our community, we have 10 short videos you can watch right here. Okay, so everything's in this PDF. Again, I want to stress this, what I teach you here today is a free strategy. Okay, except for the fact that you might have to get an upgraded TradingView account you don't have to buy anything to get access to the strategy and to learn it. Okay. I don't give trade signals. I show you how to do this strategy, right? I have the videos there. I do a weekly recap like this every week, showing the trades that went off. I'm not able to take all the trades, but the ones that I do take, I show you, and I also show you the ones that I were not able to take. Okay. Now, let's go to my trade locker account, my demo account. And again, I'm trading this strategy right now on demo, guys. Okay. So with trade locker here, you can see that there was a trade I took in AU. First of all, for the week here, I just want to show you here that for the week, let's see, for the month, I'm showing a profit of $5,135. Again, that's because this is a $100,000 demo account. Okay. So if this was only your live account and you only started with $1,000, right? Then this profit would only be about $50, right? But again, once you learn the strategy, you know, there's other options available where you can trade with other people's money by going to a prop firm, right? So once you learn the strategy, you can take a prop challenge. You can pass a quick test to show that you know what you're doing, and then you can get access to other people's money, and you can trade using other people's money and keep a large portion of the profit for yourself. Okay, but this month, $5,000. The last 7 days, we showed a profit of $3,125. So 3% of the account, right? 5%. We have a 5% gain this month, right? And we have about a 3% gain in the last 7 days. It's not always like that. You'll see that when you watch my videos. This was just a good week and a good month, right? So this was AUD USD, and this was a trade that I did decide to exit on Friday. I'll tell you why I exited in a second, but you can just see here on this account that this was the fib we drew on the 1 hour time frame. Price came back right to that 71 spot where we wanted to get in. It did keep going, but our stop loss was much higher up here, as you'll see when I show you in a second. And then price just kind of really dicked around here, and it was Friday. It was Good Friday. It's kind of like a holiday, not a lot of action going on. Price also closed above the 800 EMA, and that's bad for a selling position, right? So we did exit this trade with a very small loss of about $120 or something like that, I think. What was that? We got out of this trade with about $120 loss, and there was some fees involved there that made it $154, okay? So let me show you this. This is AUD USD. And so here, what we had here was price was trending down here. As you could see here, this big move down, price was below the 800, the 50 was below the 200. I go over all this in video. But then you can see as price was moving up into this was our initial 4 hour supply zone right here that the indicator gave us, okay? Now, it's no longer showing up here because once price goes through that zone, it disappears. Okay, but this was where it was at, and there was another zone right up above it here. Okay, and this is actually what we used for our invalidation zone or our stop loss. Okay, so what you could see here is that price came up into the zone, but as it comes up into the zone, it now closes above the 800 EMA. And that's kind of a bad sign. You'd like to see it maybe not close above there, right? I'll show you that in our winning trade from the week, which was GBP CAD that we actually got in last week. We actually lost the first position and then we got back in it. And I'll show you that in a second. But just to see this here, you can see how price comes back into the zone here. Okay, basically on that candle. We drop down to the 1 hour, and now we wait for that sell shift, right? Again, I go over this in the video. The sell shift is when the 5 EMA, which is the yellow line, crosses and closes below the 13, which is the red line. All right, you need to wait for that 1 hour candle to close. And you could see right here, you do get that sell shift, right? So if we move this over here, okay, where we get that sell shift, right? And then we drop down to the 30-minute, and we want to see if we get a change of character, okay? And we can see that as price continues to move down here, we do get this change of character or this choke. And the indicator tells us that, right? That's why, like I say to you, this is a damn near 100% objective strategy. The indicator is showing you get the choke. Now, sometimes it's going to say you got a choke, and it's not really a choke. And so you have to be able to identify that, but that's like 5% of the time. And that's why I say this is a damn near 100% objective trading strategy. Okay. Now, this to me is a valid choke here because price does move higher. So it uses this low right here, and price comes down, closes below that low. And so if we go back to the 1 hour time frame and we look at that and we say, okay, let's draw our if we kind of draw our fib from here to here, and we wait for price to come back to that 71, it does. Now, the issue is because we have that other zone right above it, right? When we're on the 4 hour time frame, right? We used that zone for our invalidation area, right? The wrong thing. So if we want to get in this trade, as price comes back to the 71, right? We knew that our invalidation zone was going to have to go there. And so when we're looking for our next zone to set our target, it's all the way down there. So we had plenty of room to go on this trade, right? Okay. We did not get stopped out of this trade, again, because we used the 4 hour zones for our invalidation areas. Some strategies will teach you to use these highs that are created, right? And you draw the fib zone from. We don't do that, okay? We don't do that, okay? Our style, this style is more conservative. We use the 4 hour zone, right? Now, if there's another area close by it, we will include that 4 hour zone as well. And that's what we did here. Because you could see here, if we just use the initial 4 hour zone, when we take this trade, we will get stopped out of the loss, right? A 1% loss or about $1,000 with the $100,000 trading account, which I have on demo, guys, right? Full disclosure. So if you don't include this other zone, which is close by, you would get stopped out of this trade, okay? Now, we end up exiting the trade anyway with a very small loss of, like I said, about $150 total. But that's way better than losing $1,000, okay? And the reason we exited the trade, again, is because price is now above the 800 EMA on the 4 hour time frame. And that invalidates our initial selling setup, right? In order for a sell to set up, price has to be below the 800 and the 50 has to be below the 200, okay? Now, we're not worried so much about the 50 crossing above the 200 as price moves into our supply zone here, right? That will happen. And that's okay in most cases. But we don't like to see the price close above the 800. And then as you can see here, it tries to move down and then it keeps going back up above again. And that's why this really looks to me that next week, this may make a slight move down, but more than likely it's going to end up going up through this zone, and it's probably going to look to get into this higher zone up here, which we're not going to want to trade from there anymore because now price is above the 800, the 50 is above the 200. So we're actually going to look now for buying opportunities, right? So once price moves up there, we'll probably have a buying opportunity. We'll have a demand zone down here on the 4-hour time frame. Okay, so that was AUD USD. Now, a pair that I was not able to take a trade on was EUR CHF. Okay, so EUR CHF, as you see price moving down here, right? Price moves down, it breaks this structure here, and it creates this zone right here for us, right? You can see if I remove my highlight that I put in there, that is a zone that the indicator gave us, right? Now, again, we're looking to sell. Why? Because price is below the 800. That's this dark blue line. And the 50, which is this aqua line, is below the 200, which is the gray line. That's our initial trend bias determination on the 4-hour time frame. And then the indicator gives us this zone to trade from. This candle comes up right here and puts us into that zone. So let's see what happens on the 1-hour time frame. Let's shut this all off for right now. Price comes into the zone. So what are we looking for? We're looking for that sell shift where the yellow EMA crosses and closes below the red. We get that right here. Okay. So now if we move the line to right here, we need to drop down to the 30-minute. And this is the new part of this entry strategy that's not on the initial video here. So you won't see that if you watch this entry model video right here. We actually are waiting for the change of character on the 1-hour. But now what we've done is we've dropped down to the 30-minute. After we get the buy or sell shift on the 1-hour, we then drop down to the 30-minute just to see if we have a change of character, because it's been taking too long for the change of character to occur on the 1-hour time frame. So you can see here, the indicator is telling us right here, we get a change of character as price comes down and closes below this low. Now, to make it even better, it also takes out this low down here, which is a better one, right? So price just continues moving down. So we go to back to our 1-hour and in order to draw our fib, we have to first wait for price to start to retrace, right? So price comes down and it comes all the way down to here. So we're going to draw our fib from this high to this low. And we're going to look to enter this trade on price hitting the 71. Okay, and you could see that price comes up and to the pip, it hits that 71 fib retracement right there. To the pip. Now, if we wanted to, since we have this, we could look at it, we could have got in maybe at the 61.8, but it comes up and it hits the 71 to the pip. Now, so if you're going to set up a trade with this, this would be a short sell at the 71. The invalidation zone has to go above that 4-hour zone, right? So let's make sure, let's go back to the 4-hour time frame. We know that our invalidation zone is right above there. And the problem is here now, we don't have a demand zone down here for our goal because price just hasn't been there for a long time. Price is now making all-time new lows on EUR-CHF. So we just don't have a demand zone. So when that happens, you just use this low right here. And you can see that we're able to get basically a 2.27 gain if this area is hit. And you can see what happens is on the 1-hour time frame, price comes all the way down to here. Okay. And this is actually a new part of our strategy that I'm going to write down for you right now. Once you have a 1 to 2, you can see that right here we have a 2% gain. Okay. So how do you manage your trades, guys? Do you just wait until price hits your stop loss, or your take profit? No. There is a way that we manage our trades, but we don't do anything until we are up. Don't do anything until we are up by 2%. Now, sometimes our goal may be set right at that 2% because that's basically our minimum to take a trade, right? If we don't have a 1 to 2, we can't even take the trade. So sometimes we do just have a 1 to 2. This one actually has a 1 to 2.27. So we do have an opportunity here that once we are up by 2%, what we do is we close half of our position and we move the stop loss to break even and trail, right? Until we hit or take profit or TP, or we achieve a 3% total gain on the trade. So I'll be able to show you this in the in our winning trade from this week. But essentially, on this trade right here, okay, when price comes down to here, we would want to exit half that position, right? So now we're up 2%, or in this case, about $2,000. We exit half the position. That gives us $1,000, $1,000 gain in our account, okay? We don't want price to go up 2% and then reverse and we end up losing a 1% or $1,000, right? That's a $3,000 shift. That will kill your mindset, okay? So what we do is we don't do anything until we're up by 2%. Until we're up by 2%, we do nothing, okay? Now, if you have a situation, again, we don't really worry too much about news, so you don't have to even go there. I was going to mention news, but again, because we're taking these trades on the higher time frame, you don't really have to worry about news. But if you're in a situation where you're up close to 2% and you have a really high impact news event coming out on your pair, and you kind of think there's a chance that it can make it go the other way, you would never really know that anyway. But you know, you could think about exiting it. But for the most part, 95% of the time, you're going to want to do nothing until you're up by 2%. So when we're up by 2% here, we would close half the position, move the stop loss to break even. Now, we really don't have anywhere to trail this on the 1 hour time frame. You know, price comes down, it does move back here, then it gets to that 2%. We close half the position, it comes back to here, but this really, to me, that's not really a valid trailing stop loss point, okay? Because in order for that to be valid, you would have to get a move down and you would have to get a close below here now, okay? And the same thing happens here. You really don't get a candle close below this area here. So that means that this area here is not a valid trailing stop area for me. Okay, so you really have no valid trailing stop area. So in this situation here, you would still be in this trade. So this is a trade that we're still going to look to see what happens with next week. Okay, because we would essentially still be in this trade. Now, we closed half the position. And again, I was not able to take this trade because, as you guys know, I'm at the restaurant during the day. So sometimes I miss these trades, but I still track them for you. on this weekly recap. Okay, so this one's getting a little bit longer, but I want to show you this and I want to explain this to you. Again, you don't do anything until you're up by 2%. Once you're up by 2%, you close half the position and you move your stop loss to break even and you trail it until you hit your take profit, or, right, you achieve a total 3% gain on the trade. Okay, so if you got your 1,000 in the bank, right? You need another 2,000 to be able to exit that trade at a 3% gain on a $100,000 trading account, right? If it's just a $1,000 trading account, right? Then what did you do? You put your $10 away and you're trying to get 30, right? Okay, so don't do anything. Close half the position, move the stop loss to break even, and trail it until you hit your take profit or the stop loss gets hit, right? So I should say trail it. What am I saying? Trail it until we hit the take profit or the stop loss, obviously, or we achieve a 3% total gain on the trade. Okay, so that's EURCHF. We're going to look at this next week, where we would have held this trade over the weekend because it was in profit, right? And not only in profit, right? Price is still below the 800 day, so nothing's changed there, and the 50 is still below the 200 as well. So there's no reason to exit this trade like we exited the AUD USD trade, right? Okay, let's move on to our winning trade so we can wrap up this video here. So our winning trade, and I left this on here because I didn't want to lose track of what I was doing here. If we pull up our winning trade here, GBP CAD, okay, we can see here that we got in the trade right here. This was the trade we got into last week. We got into the trade right here on April 9th. See the diamond right there? We exited half the position once we were up that 2%, like I just showed you right here. And then we exited the rest of the position right here when we were up a total of 3%. Okay? A total of 3%. So that's what we did there. And you can see here, after we exited right there, price kind of moved down and then consolidate. So let's look at this trade on TradingView here. This was a trade that we initially lost, right? Price went through our initial 4-hour zone. We took the trade, we lost the trade, right? See how price moved up here, then came down, we lost the trade. Now, the reason we re-entered this trade was because on the 4-hour time frame, here's your 800 EMA. And look how price is just finding support there, right? This wick comes down, closes up here. This wick comes all the way down to here, but price closes above the 800, right? So you have 1, 2, 3 4-hour candles where price drops below the 800 EMA, but it always closes back up above it. So because of that, and because there was no other, the next 4-hour area was all the way down here, guys. So this would have been my next area to potentially trade from, but if price would come down to there, it would obviously go below the 800 and I wouldn't be able to trade from there anyway. So I felt really strongly about this. So I got back into this trade simply because price found this support at the 800 EMA. We had 3 4-hour candles, like I said, that closed down below it. And there was imbalance here. I did mark up that imbalance, and I knew the price was probably going to move into this area at some point. Okay. So we got in the trade and we just got in it. We didn't draw a fib or anything like that on this particular one because we had already done that here, right? When this move here happened and we lost the trade, right? So you could see here, price moves into our 1 hour zone, essentially right here. Then when we drop down to the 1 hour here, we get that change of character, right? So we drew our fib essentially from here to here. Well, we got the shift right here, right? We just move this. We got our buy shift right there. If we drop down to the 30-minute, we get a change of character right here. We also get the change of character on the 1 hour as well, right? And I did move this shaded area here, so I do have to fix it. But you could see we then draw our fib, price continues upward. Our fib gets drawn from there to there. Price come back, it gets us in the trade. We had our stop loss down here below this imbalance, but we got stopped out. I think that's where we had our initial stop. Anyway, we lost the trade, but again, we went to the 4 hour time frame. We said, hey, price has found support at this 800 EMA, right? You have these 3 4 hour candles like I just showed you. So we got back in, right? We got in, let me see. Entry price was 1,80741. Stop loss was at 183386. 83386. Let me see. We got in here. Oh, that's because we moved it to break even. So it doesn't have our initial one. So our initial stop loss was probably put down below, somewhere down below that low there. Anyway, we exited half the position once we were up by 2%. And then what we did was we trailed our stop loss. So initially we would have moved our stop loss up to here, right? As price moved up. And then when price consolidated here and moved up again, we moved that stop loss up to this area right here, right? So we closed half of our position here. Once price moved up, we initially put our stop loss at here instead of break even because we already had a trailing stop loss point that we could use. Okay. And then it moved up and then we got our 3% gain. So we just got out of the position, even though it was very close to our take profit and ended up not hitting it, and price then dropped down and consolidated. So we will keep track to see what happens with this next week, but we're obviously out of this trade. So that is the recap for the week of April 13th, guys. I know it went kind of long. We had the GBP CAD trade that we got in the prior week and held it over the weekend. That's the one that got us our 3% gain. We got in AUD USD, but then price kept going back above the 800 and closing back above the 800 several times. So we did decide to exit that at a small loss on Friday. And then I showed you the EUR-CHF trade, which was a good trade as well, but you would still be in it after closing half the position with that take profit, the 1% gain because you closed half the position once you're up 2%. Okay, so that's the new thing that I wanted to show you. And this is something that we'll have. This will be part of the strategy where once you're up by 2%, you close half the position, you move the stop loss to break even, and you trail it until you hit your take profit or stop loss, or you achieve a 3% total gain on the trade. Again, guys, if you don't have this PDF yet, there'll be a link down in this video, below this video. If there's not, just get in touch with me. I'll send you the link right away. And again, this is a completely free strategy. This is my damn near 100% objective 4-hour supply and demand zone trading plan. And it is free to you. If you want something that's more done for you and you want the opportunity to take more trades during the day, you want to click on this video here and watch this. Then click on this video here. And if you just want more information about our community, you can click on this video and watch these 10 short videos in our secret podcast. Have a great weekend, guys. And happy Easter to all of those out there that are Christian and celebrate the very, very blessed and important holiday.